You fucking kidding me right now, bro? Like,
Booked a loss, no more MYM. Again, I mean, we just got like 6,000. Very, very positive. Again, especially after that W right there on the NQ. What a good day, man. How is energy? We're going to find out. But this is your first move. Again, now is where you want to be reacting. About two. It or not. Again, I know I closed out my play there, and that's what I'm saying. But from here, it's rare right here to be able to hold up. Jobless claims, they just came in slightly higher, which is also a little bullish, but that's not going to move the needle. Right now, it's core. Month over month dropped a lot. Core CPI dropped a lot. That's it.
First, I needed a face and some photo. I lured my friend.
I knew you wanted me. But woo! Ah! Damn.
That the Fed in the White House, or the Fed in the White House, the Democrats could have used this on Monday. They might have done even better in the congressional election. Nah, it's weird because, like we said, everyone's going to play the Friday game. You know what I'm saying? So that's what we got to watch out for. Like, everyone's going to play that Friday game of, or not Friday, the next Fed meeting or the next.
So, all right.
Significant positive surprise on core. Nomura and Omar series of inflation were about the only economists looking for a number as low as what came in. Again, Chad, is what I told you here literally in the morning. That core month over month was just too low. That's what we're saying, because if it hit 0.4, it's still priced in a higher terminal rate. But 0.3 was just very, very low. And now, literally, out of the 50 or 60 economists, only 2 of them were predicting that core would actually even hit 0.3 months.
Are you hearing me? Okay.
Let's see. Zaza is moving up, you said? Oh, yeah. So look at this.
So, basically, I'm just showing you how the stock market reacts to CPI, and this is a guy that I watch like all the time. He taught me a lot that I've learned about trading, like understanding. So just check it out, and I'm gonna show you this and also the charts, and then probably live trade today about 9:30 when the market opens. But let's just run it.
Without my gal put, I took, I mean, $7,000, but it was a net profit of about like $4,600, $5,000 on the NQ. So that's it now. And then we just hold the rest of our shares. And we got a shit ton of cash because we've closed out a majority of the futures now. So there's Tesla. Again, bond yields are moving. You can make a play on bonds if you want, but it's already moving big. Let's wait for the first pullback, but now we're saying it's already held this, so it's looking very, very good. We're seeing a 16 basis point jump on the 2-year Treasury. NASDAQ futures are up over 0.3 or 3%. This tells us that we will get the mother of all rallies whenever the Fed finally confirms it's slowing, and even more when it becomes clear the tightening cycle is ending in sight. How do you go? I'm in futures. All right, there's the first one, bro. 3876. I guess we've been a lot higher. Oh, I don't know. It's like big, but
Wow.
A little bit more.
Yeah, I knew it would wipe out all of that.
There's going to be a lot of moves again. Thankfully, the good part is we have the read, and it seems like it's kind of simple because it was shocking to the downside. But now, wait another 10 more minutes. Again, by 15 minutes in, as we start getting open, and then we got to watch the cash open. That will be key, but you've already made it past the first test. Things are looking decent again. You had a print on core that only 2 economists were expecting. It's showing some moderation again. Is inflation down? No, asshole. But this is the lowest reading that we've had in 12 months. People are going to like it here. And now with core, the sticky parts. Let me get you shelter, though. I don't know. It was in a weird way, even though the headline numbers are good. I haven't heard anybody talk about shelter yet. Yeah, shelter is still massive, but now do you see it? Look at it. It was like all of these. It was transportation goods, like used cars. Then it was, what was this? Purple, other, and then red was apparel. So retail cars, other killed it. But then, yeah, shelter was still kind of sticky. No one's really, I think that if people want to come back to that, they might get mad. Yeah, indexes for shelter, vehicle insurance, recreational, and personal care were among those that increased month over month. The declines in used cars and trucks, medical care, apparel, and airfares were the biggest decliners. Maybe CPI was good enough to cause this because of core, but just watch out. Still might be able to, but I mean, you are leaning a little bit more bullish than not. That's all I'm saying. So, man, that was a wild one. That one was a wild one. But, Chattadonia, I'm going to go pee here. Give it 5 more minutes. Let's see what they're saying on Bloomberg television. I'll be right back. Follow me on Instagram. I love you. Amen.
19 basis point, 20 basis point move.
Alright, so turn this down a bit. We could have traded the. Come on. Well, you got nothing on this. Not finna sign. Well, let me sign in real quick. Just signing in real quick, alright?
I don't think so. I mean, I think the worry is when you downshift, that you ease financial conditions in a way, kind of like what we saw in July, that is counterproductive from the Fed's perspective. This is one data point. We had 0.6 of the previous month, this is 0.3. There are some encouraging elements within this data point, so I definitely want to emphasize that. But the Fed needs to see more to say, we can decelerate them from 50 down to 25 and ultimately pause at some point. It is something that I think helps them along that path, but it's not conclusive evidence, I think, that they can peak up at 5% and be fine.
For others watching this and listening right now, they won't just have to hope the Fed backs away from 75 and goes to 50. And if data, if we get the data like this again on December 16th and the doorstep stage, they're hoping that the second piece of the communication from Chairman Powell also gets readdressed. So it's slower, 75, 50, maybe 25. He also said higher. Does this remove the risk or help to remove the risk? The terminal rate, scope for the terminal rate to go much higher than where we are fast right now as we move.
Yeah, some of the context around those comments was lost. When Chair Powell is talking about a higher terminal rate, he's usually referencing what the SEP dot plot was showing in September. That terminal rate was 4.6 as a median.
Up from 380.
Up from 380. But I think he was saying higher than what they had projected.
Mm-hmm. Mm-hmm. All right. So off the CPI reaction, which seems like
getting here into the
was good news, and I'm gonna show you more when the other guy starts explaining it more. Let me mute him a little bit. So everything rallied because CPI came in lower, and then that means inflation is a bit lower. That means that the Federal Reserve can tighten a little less. So look at this. Should take a break, but CPI. 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 Movement. Yeah, so basically that happened. So the news came in a bit good. We had a crazy rally. Let's see how it will do today. So QQQ is going to be the ticker. We're gonna see a gap up, and as soon as I click this, you'll see a gap up. So depends how it plans to play. I'm just gonna see if it's gonna respect here and continue or fill the gap. I don't know. So basically cleared all of that to set the precedence for what now? To continue going up or come back, play with this level and go up, or come down, play with this level, go up, or again come back down and just zigzag all the way down. Zigzag, zigzag, zigzag. So that's basically today. But let's listen to what this guy is saying. And this guy, as I said, this guy taught me like everything, dog. Not everything, but a lot. And he's very smart. So just listen with your ears.
It is the best one that we have gotten. Cook reporting is already midterm is over. That's what they were saying. Like, to be honest with you, Biden should have dropped this shit last week, bro. I don't know. So, hats off to them. I mean, I guess it's over. You can't even vote. That's what I was saying yesterday. There's no incentive to do anything anymore. So, honestly, the fact that this came in good is very surprising. So, again, you can see it in the reaction, but it's nothing about dropping or not. I think it's just going back to core again. Like I'm saying, it was a shocking reaction. It was literally, even though the expectations were tight, just nobody was expecting core to drop in half. So now you actually have the chart here. Let me show you why core dropping is so big. Let me show you. And now you'll finally see it. I can see clearly now. This head is back. So take a look. This is where we are right now. It just came in, but it was expected to come in here. So this whole time, while normal inflation was coming down, core was actually 1 month away from peaking again and hitting a new high. So now it came in half the pace. We've seen this before, and it's bounced back up. So that's the worry. But the fact is, it is now coming back down, and it's been holding this for about 3 months, and it's not continued. So it could still go up right off the bat. I mean, that just wasn't really supposed to happen there, and then that's pretty much it. Again, the other headline numbers also dropped, and other things came in softer, but the stickiness finally dropped a little bit, and I don't think anybody was really prepared for that one. And then I think all we have left is the Qualcomm short. I'm still gonna ride that one out here for a little bit. What's still red? I'm waiting for the bonds, but they keep going up. No. Damn it. Bonds might be the best. I mean, it's still a pretty big candle here. Like this is a very big hour on the bonds, but I mean they're up only 1%. While everything is up 3%, but if that phase now is not going to be good. Oh wait, we're 386 on SPY. It's really not that crazy. MO red, let's see what else. Sharif says medical care. It's been hitting the drum about a week of health insurance for in July. That fell 4%, a touch worse than the 3.6. Luzetti says there's evidence that inflation is coming down from the peak, but the question is, where does it bottom out? Ratchet down to 50 basis points, but still no pivot. This demonstrates the breadth of inflation. The October reading is 67.5, saying that 67.5 of the basket is increasing in price more than 4%. This is actually up from September's at 65.2 and needs to come down. So this isn't good. I've shown you this before. The diffusion index found a way to go up today. That's odd. So even though core dropped, your broad-based, inflation is above 4% in those categories. So there you go. That's something, but we're going to ignore it. No one's going to pay attention to that one, but that's a little concerning. There's a lot of good news if you're looking for sectors with price declines besides that. Used cars and trucks fell 2.4 in October, 1.1 in September. The apparel index 0.7 over the month after declining 0.3 in the previous month. The index for airlines fell 1.1 in October, following a 0.8% increase in September. No one will look. Well, no, advantage is not. The other factors that were better or bigger, pretty much. So get ready here. It's already been 15 minutes too, and we have been continuing. I mean, this is already a 3% gain pre-market. So I'm expecting some level of sell-off. But just watch out for here because now, I mean, you've already moved a lot, Chad. So I hope you woke up early because now it's just where we have another hour here until the bell. But then it's all about how we move leading into it. So a lot has already happened, and just get ready. Again, cash open is going to cause a move, and then we got to play everything out from there. It's just a matter of the setup leading into it now. My goodness. How do you feel, Chad? It is it's going to be a wild one today. Now we got to even think next week. Now you have the midterms out the way. Again, people are going to be looking for that 390 to 400. What we want to look for if you want bears, listen up. If you want this to flip, you got to watch the bond yields. See if that rally ends up stopping. And then I think we have 2 or 3 Fed speakers today. If they kind of shit on the parade, it might kill it. Otherwise, let's see. As long as Sam Bankman-Fried, any Fed speakers, or the dollar global events don't get in the way, I mean, you're gonna have mother F who are gonna want to buy this shit up. So we're gonna find out here. Yeah, we're still at the highs of Wednesday. That's why we might go up about it. And that's why we're gonna need to wait till open. I want you to realize right here, right now, the market is up.
So right now I'm setting up my platform to have the widescreen plus the webcam plus my phone, so we can actually like live, like you see the trade, you see what I type in, so that's what I'm setting up in the back end while I'm not talking. Just listen to this guy. It's so much knowledge and it helps you to interpret the stock market news. So just listen to this guy. All right, bet.
It just starts to get pretty wild. So we got to see how it holds up. And again, watch the dollar and any of those other factors. 2-year yields are plunging after the CPI was released. Futures are climbing. This is the biggest rally after CPI in a while. This is more than 2 standard deviation of a typical CPI day. They have their own. So even on the futures reaction right now, just right now, first 10-20 minutes, this has already been just 2 standard deviations and one of the biggest. So far, none of them have moved this big in the last 12 months. So again, just like Powell, now today's a question of what can make us flip. So think about it. We know the data's good. We know the market likes it. Anytime we've ever done anything this rare and cross-asset rally, it was something big derailed it. That's all I would be looking for today. That's it
That's
now.
it now.
If
If Sam Bankman could derail it or anything else,
that's
that's
it.
it. Otherwise, we're gonna find out what happens from here.
My
My
streaming
streaming
from
from
somewhere else.
else. We are also on Twitch right now.
We got
We
you,
got you,
baby.
baby.
FTX news.
FTX
news is dirty, bro.
That's the
That's
thing, though. I'm
under the bro. Everybody knew. Everybody
was
just
just quiet.
Like, dude,
Did you see that Elon Musk had text messages in the deposition,
and
someone tried to introduce him to Sam Bankman,
and
Sam Bankman was trying to get in on the Twitter deal,
and
Elon was like, does he even have $3 billion liquid?
And then,
are you ready? I think I figured it out. I actually have a really cool. I'll read this to you guys today. And again, I hope you guys realize with all of this too, even down to CPI, everything like. For real, I hope you guys can respect everything as opinion. You know what I'm saying? Even like with all of this, like I'll break down the story to you. Like I don't know if you guys were here, but like if you really think about it, we were breaking down the whole thing live as it was happening and affecting the market. But I'm just telling you, there's a lot of opinion pieces. I want to read you this one today. There's an opinion piece that came out, and I'm telling you, it just goes in so much depth about the spiral that occurred. But like essentially, bro. This is like an episode from Billions. If you've ever watched the show, pretty much, like there's two big factors of what Sam did, and this is what we're gonna find out here in the next coming days. But like, the dude, he did stuff wrong, and we're gonna find that out. But like, one of the things that happened was that the guys, like you got like FTT token, he was buying the token like a buyback. So essentially, FTT token, the better that FTX did, the more the coin would rise. Right? So in a weird way, what Bankman was doing was he was betting on his own company. And this is the problem because people would say the price of your stock going down should never be able to bankrupt your company. Never overnight. You see, like Coinbase, for a matter of fact, like they shouldn't be able to be bankrupt overnight. No company should be able to have that happen. If your stock price goes down, that's just not normal, right? Because your company is not linked to the price in every way, shape, or form, right? Unless you buy back a majority of your company, your biggest holding is your own company, and then you lever buy your own company. So now, if the biggest asset your company owns isn't real estate, but it's your own equity, and you levered it, that is the only scenario where you could go bankrupt if the value of your asset plunges. Are you following? So that's why it's getting so weird right now because it's just that he went full blown YOLO on his own company. So in a weird way, if you wanted to view it without any crime, you could argue that he did that. You see what I'm saying? Like you could argue that he bet on his company, he believed too much, and he levered his own bet on his own company, and that's why it exposed him to the risk of the asset price dropping, threatening his wealth. Right? That's number one. But now, as somebody who tells you a lot about taxes, I'm gonna tell you part number two that's kind of messed up now with Alameda. You gotta realize Alameda, he helped form it, but it's a separate company than FTX. FTX is a brokerage. So if you go and sign up for FTX,
Are you crapping right now?
Do you guys realize that they will loan you money? Or that's just what they do to anybody. If you signed up for FTX and joined in, you put in money, they'll give you leverage. So now here's the next problem.
You got back.
Are you ready? But essentially, FTX will let you borrow money if you are a client. So the crazy part is they will take FTT as collateral for the loan. So hypothetically, this is what I know from taxes, and I think this is what he did. His company is separate. He could go and take Alameda. They could have made an FTX account and they're different, and FTX could have gave Alameda a margin loan. You see what I'm saying? It's two separate entities. It's not Sam giving a loan to Sam. It's just now, so Sam, he didn't directly give clients your money and gamble with it, but he just gave another big client a margin loan. And now here, no, it's not even wild yet. Here's the crazy part. The margin loan is collateralized by Chuck E. Cheese tokens, FTT. That's his mistake. So it's not that he gave margin to clients back, there's nothing wrong with that. But if he didn't get a Bitcoin in return, you didn't get Ethereum, and you didn't get the right collateral, and you received FTT token instead, exactly, it's all collateralized by FTT. And and there you go. But it was the company. So even then, Alameda was just a FTX client who just so happened to be one of his companies. But do you see, that's why it's a little bit watered down. So technically speaking, Sam never used clients' money to invest, but a client took out a bad margin loan and they collateralized it awfully. And there you go. So pretty wild. But that's the only and again, why we're bringing this up, that's the only thing that could stop this right now today. Otherwise, it's going to be one of the Fed speakers or not. So let's jump back now. Let me give you a little bit more pre-CPI. The peak expectation for the implied federal funds rate was 5.06. Now we're down to 4.86. That's the Zaza. Again, Zaza very bullish away from the CPI. The story showcases how big the movements underway are in supply chains. Remember, the big worry right now is service inflation, not so much goods, but this is still good news in terms of a broader price dynamic. The BLS gives inflation estimates for a handful of cities each month. Phoenix led with the highest annual inflation at 12.1. Atlanta and Miami were above 10%. These are very attractive Sunbelt metro areas. A lot of folks have moved, so we could presume hot housing markets have something to do with that. Ian Leingen of BMO Capital Markets, he said, quote, "From here, we're watching for any write-up of the Nick Timmerhouse suggesting Fed officials won't adjust policy on a single print or something of that effect. This should take 75 off the table for December, but not 50. Do y'all hear that? So watch out. So already BMO, like I'm saying, everybody's just waiting for the next thing that can derail this. And right now, somebody's bringing up the theory, watch out for Nick Timmerhouse and watch out for the next Fed person to say, no, we're not going to move on one data set, right? So keep that in mind. But that's coming out now. Catherine Judge, economist at CIBC Capital Markets, she warns not to get carried away about the Fed downshifting. While the deceleration in core prices is a welcome development, and we continue to expect supply chain improvements to feed through to the index more meaningfully, the strength in core services still supports an outsized rate hike at the December FOMC. Watch out for a lot of finance ministries around the world will also be breathing a sigh of relief. The yen is up 2%. That's stronger than the point at which Japan Timmerhouse, and watch out for the next Fed person to say, no, we're not going to move on one date. Let me show you. And now you're bro, I'm under the bro. Lateralized it awfully. And there you go. So, pretty wild. But that's the only and again, why we're bringing this up, that's the only thing that could see in December. Let's see, that's bonds. They went up to 102.5. I want the bonds, man. Again, Zaza is the most bullish it's been in a long time. Bull lodges. Don't get carried away. I hope so, Chad. Please don't get it twisted. Again, even if we're saying bullish tilt, like, you got to be able to understand it's good, but right now, like, I'm talking about it, and you already have people saying, hey, be cautious. We know there's something that's going to try to take out our knees on this one, okay? But either way, just don't get carried away no matter what it is. I mean, if anything, I use this move to take profits and close out other trades. We still got another 7 hours right now. So just on both sides, as if you got position in riding, use your runway and ride it. But just keep in mind, we still got a lot on the table here for the day. Rubio Faruqi, chief economist at High Frequency Economists, he said overall the 12-month changes in both headline and core remain uncomfortably high, and we would hesitate to overemphasize one report. However, the data will be welcome news for the FOMC, which is finally showing some response in prices to 375 basis point of rate hikes. Honestly, that's the best quote. That's what we said. Like, Chad, you got to realize it's like, hey, inflation's not down, asshole. It's still high, but it's just like it's a welcome report right now, and it's finally calming some things down, but it doesn't really, again, we're waiting on more data, and we're waiting for somebody to emphasize how the Fed is not going to do anything after just one thing. You know what I'm saying? Don't kill I'm not trying to kill your vibe. I'm trying to keep the vibe. Amen. I hope you feel me. That's what I'm saying. If you had anything good out of here, just be smart with it. And then, even on the downside, if it's going against you, I don't want you to ruin it by getting too jumpy. Again, we've seen too many of these days. Like, the risk is there on both sides. And like I'm saying, if anybody wants to run in front of a train, be my guest. But this is one of your biggest CPI reactions in a year. Last time that happened on Powell, it ended an hour later, and it was awful. We need to know what's going to happen here. So we got 7 hours to figure it out right now, and hopefully you're seeing. We know what to be cautious for. Overall, the broad picture, it's better than what we've gotten in 12 months. Things still aren't good, but now you're going to have to battle everything out with Fed expectations. So let's see and even watch the bonds. I want to buy the bonds, but I feel like I'm a schmuck. I want to buy it on a lower candle. Do you think it makes sense to buy the first dip? Yes and no. It's going to be expensive. That's all. These are the expensive moves. If it gets back to opening level, that's where it becomes cheap. That's all. Bro, this is the Rolex. This is the Rolex. This is the Patek if you want to make a play up here. Very simple. This is the damn Casio in the 25-cent machine. Just wait till if you want to play it. That's all it is. It's going to be expensive if we have it. You have the bullish tilt, and I like it. But at the end of the day, though, it's like, if the dollar comes back, if we give up anything, it's just the move is going to be expensive. So just remember what we said about getting punched in the face. That's what I mean. Like, legitimately, it's going to be expensive. So that's one of the moves. If you buy the first dip, like right here at 380, most likely, it's either going to flush down to 378 or just going to bounce right back up to 382 and you make a bunch of money. So it's just high risk, high reward. That's why I'm saying it's expensive. So I think if you control it the right way, you'll be good. But I am waiting for the broader I want the broader picture to play out here to be able to position. Where it's like little by little, just go for the easy ones today. And if we could confirm how it's going to play out, then it's going to be great. But just don't forget, the money right now is information. So the first set of information, it gives us a small green light. But a lot of people are worried about a yellow light with Powell, the Fed, and then again, if the bonds retreat, that won't be good. Or worst case scenario, the dollar makes an aggressive move for God